The easiest way to outperform the market is to buy solid assets at a discount. So you want to look at things that stay around for a long time and you want to buy them when nobody wants to buy them. We want to buy Bitcoin after a crash and maybe we want to buy Ethereum after a crash as well. Because that's the fundamental question. Will Ethereum stay around? Will the stablecoins still be issued on Ethereum? Will Ethereum be the magnet for capital again, or will it just fizzle out into obscurity? If you think that Ethereum will actually stay, that it will have some relevance in the future, now might be the time to get in. What we see over here is the Ethereum dominance. So how much of all of crypto in terms of market cap is currently in the ETH token? We tend to be trading in somewhat of a range, with the higher bound being 20% and the lower bound being 7%. And we are currently at 7.6%. This chart tells a story that the potential risk versus the potential reward is very good for Ethereum right now. Now, why did Ethereum get that much adoption in the first place? I think it's because of its mining. So in the early days, one could mine Ethereum just with a regular CPU. No specialized hardware, no specialized ASIC miner was required, as is now for Bitcoin. With Ethereum, we can simply just use a regular GPU and make money, converting electricity into cryptocurrency. But as we all know, things have changed. Ethereum became more environmentally friendly. Ethereum moved from proof of work to proof of stake. And that's indicated with this arrow over here. This is now Ethereum relative to Bitcoin, not the Ethereum dominance. But we can clearly see that since the move from proof of work to proof of stake, Ethereum went down pretty consistently. Again, this chart tells a similar story, that the potential risk versus reward is currently very good and thus speaks in favor of buying Ethereum. But the big question is this just momentum and Ethereum was just too expensive when the move from proof of work to proof of stake happened? Or was this actually the death blow? And in the end, we are going to not bounce off that support that we formed, by the way, in September of 2019. Now, technical analysis, and with that, this red support line over here, are just marginally drawn, right? They don't necessarily mean anything except becoming potentially self-fulfilling prophecy. If enough people look at markers like this, then this can trigger some purchases. However, it doesn't always work. For example, over here, this is now Ethereum relative to Solana. And if you took the September 2021 bottom, then yes, you might have gotten some short-term gains, but we did not see the absolute turnaround to prior heights. We are now even lower compared to that bottom relative to Solana. Or have a look at Ethereum relative to XRP. This tells us that Ethereum could potentially underperform XRP by almost 90% from here. XRP performed much better than Ethereum did in the last few weeks. And so the question is entirely open. But I do believe that the Ethereum dominance and the Ethereum performance relative to Bitcoin are probably the charts that most people look at. This chart and this chart, it's much more common than the relative valuation to Solana or to XRP. Now again, here's the fundamental problem for Ethereum. Because it's not anymore proof of work and this entire community of miners had to shut down their equipment, the interest from that community and the adoption that comes from mining has pretty much completely been destroyed. Very few people are still interested in Ethereum. Compare this with Bitcoin. When Bitcoin hit new all-time highs, the search volume was at similar levels to 2021. That's not true for Ethereum. In the end, it's always a game of risk versus reward, right? How much potential upside is there and what are we risking in case the positive case does not materialize? Now, Ethereum has a market cap of 192 billion, and that compares with Bitcoin's market cap of 1.6 trillion. And here's the ratio of Bitcoin's market cap relative to Ethereum's market cap. So Bitcoin has now roughly 8 times the market cap of Ethereum. And historically, we never had been much above 10, but we did have times where Bitcoin was only double the size of ETH. Ethereum is still the juggernaut within decentralized finance. Across all blockchains that have ever been launched, Ethereum has 52% of capital, so 46 billion. Yes, this tends to decline over time, but still half of all total value locked. Here is the TVL chart in US dollars for Ethereum. Here's the TVL chart for all of crypto. The trends are pretty much the same. There's no real difference. Ethereum still leads the pack. It seems like Ethereum has found some kind of an equilibrium. We don't see that much growth anymore in terms of staked ETH, so in terms of the Ethereum that gets locked up, but we also don't see how Ethereum gets unstaked. So in the last few months, the staking went slightly up again. It appeared as if people start to unstake at the end of last year, but that has now stopped. So the long-term investors still believe in Ethereum. And so does that mean that I'm actually buying Ethereum right now? The answer might surprise you. I am not buying Ethereum. I'm doing something else. And the reason for that something else is over here. This shows the Bitcoin dominance. So this shows how much of all of crypto is currently Bitcoin. And when this goes down very rapidly, that's what's called altcoin season. So that's when the altcoins, including Ethereum, tends to outperform BTC. It tends to just happen once we are at a dominance of 70%. We are very far away from this. If we climb at the current rate, it will take more than the entire year of 2025 until we get to a region where altcoin season could happen again. If the market looks like this, if most altcoins are going down, and if Ethereum also underperforms Bitcoin right now, why do we try to fish for bottoms? Why do we try to bet on the few things that might do a bit of a rally when again the overall trend probably in the entire year will look like this? Why don't we just bet on falling prices? Have a look at the others' dominance. So how much of all of crypto is in the altcoins that are not in the top 10? This continues to decline, and even this long-term support has now been broken. I think this will continue to go down. And so I've been talking about betting on falling prices of altcoins since Bitcoin hit roughly 100K. And what you see over here on the right, this is short positions where the community made gains. So community members have shared their trades, and this is the kind of gains that can be made when we short the altcoins. So it's not about finding the one altcoin that outperforms the rest. It's not about necessarily fishing for bottoms. It's rather just following the overall trend. If the overall trend says we should be bearish, then maybe that's the better approach. Now, most people are too scared to bet on falling prices because there's all kinds of horror stories, right? There's the idea that you can get liquidated. There's the idea that the price can rise indefinitely, but it can only fall that much. So there's people that potentially even get into the negatives, that get margin calls, etc. There's all kinds of horror stories. But if you've got proper risk management, right? If you've got right position sizing and we do the leverage the right way, then this is a good time to make money. Most altcoins underperform Bitcoin most of the time. Why do we try to fish for bottoms when overall Bitcoin still continues to rise versus the rest of the market? It might be daunting at the beginning, and you probably have never really bet on falling prices in any serious manner. You probably never had your entire portfolio being delta negative exposed, but that's why I've made several tutorial videos on the topic. So there's more than 100 tutorial videos in premium. It's all about risk management, about shorting, about relative valuations. It's also about things like on-chain analytics and tokenomics. So feel free to check this all out. The link is down below. It's thebitcoinstrader.com. It is somewhat counterintuitive, but it's really much easier to make money in bear markets than in bull markets. In bull markets, we have to find the few winners that outperform everything else. In bear markets, we can just bet on the overall market doing worse, because that's what tends to happen, right? Most altcoins do much, much worse. Now, because most people got burnt during this bear market, I've also reduced the price of premium. It used to be $165 per month. Now it's $125. There's also a 1-week money back guarantee. So in case you don't like premium, feel free to just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. So why lose money all the time when the market is going down? Why not just have the macro environment in our favor and bet on falling prices? And of course, also have proper risk management. We are not going to bet the entire portfolio on risky levered bets like this, but with small bets, we can grow the portfolio over time. And in the end, the idea is that we are building our capital throughout the bear market that we can then deploy much more once we come back out of it again. And this might take until end of the year. So it's better to continue to build than just to stay on the sidelines. Now, if it's your very first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next YouTube video or see you in premium. Cheers.